All right, ladies and gentlemen, we got the CPI tomorrow morning. The market's pricing in a 1% move. Traders are already saying tomorrow's data will be the most important data of the year. And the last time we had a CPI, it was the biggest downside reaction since September of 2022. So, thought that would be a good place to start this video. Here is February 13th, the last CPI zoomed in, and that data came in a little bit hotter, and you see the reaction. If you pull it up on the daily, we were able to gap up and go from there because we had one more CPI ahead of Powell, and now that is the story for tomorrow. So Chad, I got the plays for you. I have the CPI breakdown. All I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. Tomorrow for the CPI, we will be live 1 hour earlier, and we will be getting all of the news and analysis live right when it comes out. So hopefully we see you there, but run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, as far as the data, tomorrow we're expecting a headline inflation of 3.1, and core is expected to come in at 3.7. So said simply, we are expecting core to come down, and headline is expected to be sticky. Why this is so important, if you remember this chart, this is looking at the headline rate. We have been staying sticky around 3%, and it hasn't been able to go lower. This has been one of those lurking bullish factors. If we get a headline print showing a two-handle, people would love that, but over the last few months, we have been holding this number, and once again, this is expected to happen again. Headline is expected to stay the same. Now, this is where things get interesting, because last time, core didn't move too much, or core came in a little hotter. It was expected to be 3.7. It came in at 3.9. Well, this time, we are expecting core to come in at 3.7 and drop from 3.9. So that's what we were looking for last month. It didn't happen, and that's what really disappointed people. We'll see if that plays out again. And once again, if we don't get below 4 or show that we're really dropping below that stickiness at these levels, it does hold a lot of importance for the data. So keep that in mind. That is the first major thing you got to understand, is that we're looking for a lower core. Headline's supposed to be sticky. Anything that goes outside of that realm, that's probably what's going to move things. But now, this is where tomorrow gets a little trickier, and this is going to be your trick to look out for tomorrow. And what I'm talking about is the 6-month annualized. You may hear this word thrown around, and this is where tomorrow's month-over-month read is going to be a little bit difficult. So if you go to the calendar, sometimes we get weird moves. The month-over-month will come in higher or lower, and then the year-over-year will stay the same. Well, here's the thing. That core inflation rate, I do believe that if it comes in at 0.4, same thing with the headline, that might change some things around, and people are going to start looking at the 6-month annualized. So take a look here. 1, 2, 3, 4, 5, 6. We get another number, and it doesn't go lower, and it actually goes higher month over month. And then even if you go back to the headline, 1, 2, 3, 4, 5, 6, you start to annualize and get a 6-month average, that number may tick up. So if there's a month over month, I believe above 0.41, we may see the 6-month annualized inflation start to go higher. And if you don't remember, last CPI, those numbers came out hot and people did not like it. Yes, a couple days later, we were able to recoup. We are even going to be getting a lot of other data throughout the rest of the week, so that will factor into it. But generally, another hot print, and then if we get 6-month annualized on the rise again, and no matter any way people cut it, if it starts to look less Goldilocks, then we'll have a problem. But generally, anything that comes in status quo, slightly lower. We don't have any issues on the month over month. 6-month annualized still shows a lower number. It doesn't increase up. Then it is going to be a punt until the next data and everybody getting ready and finalizing their bets until Powell and the SCP in the following week. So that's your first key. Very simple breakdown. Like I said in the beginning, a lot of people are hyping this up, and the big reason why people are hyping this up is because last CPI was the January one, had a little bit of the January effect in the revisions. People are expecting a more clear-cut review, and simply this is the final CPI ahead of Powell, so it may have the ability to dictate more movements and be a little bit more lasting, because only thing that could move it now will be Powell next week. So watch out for that. That is key number one. Key number two now, and this is related to tomorrow, the market is pricing in about 1%. So I went over this on stream. We've been spending the last couple of months going over options and pricing, and well, that ghetto standard deviation, you can use that on the S&P 500. Now, in this case, I didn't make a play with it, and all I did was use the daily options to price in the break even for tomorrow and see what the option chain and the market maker is pricing in. So if you go to the at the money strike prices, you could even use like the 490. I think it was like 470 when we did it right before close. It was about 0.009%, about 1% priced in for the break evens on an at the money play for tomorrow. And what that means is that the market is expecting a 1% move after the data. So if the data comes in, nothing surprising, all the numbers coming in line. If we move up or down 1%, that should not be a shocker to you. And surprisingly, that's actually a very big amount. Last meeting, we moved big. We moved 1.5 on the S&P. It was only pricing in 0.5, but we only moved big because it was a hotter than expected reaction. But last year, we had way hotter expectations for CPI. We used to come into these events pricing in 1.5, 2% sometimes, and lately, we really haven't seen those moves. So 1% is kind of generous for tomorrow. We'll see how that plays out, but it's kind of letting you know there's a little bit of hype expected for tomorrow, and depending on what we can get, we will probably be getting some sort of baby shift leading into all of the data, and then ultimately Powell next week. So keep that in mind. That is key number two. And then finally, although the CPI is a big deal, the PPI and retail sales, they also hold their own weight. So the way I'm looking at it, I think this whole week with all of the data, CPI, PPI, retail sales, this is going to build the final narrative ahead of the SCP next week, and even the Bank of Japan. That's one thing that's been moving the dollar recently. You may have been hearing about the yen. Well, that's going to happen right ahead of the Fed. So this data this week, we will get a little bit more overseas. This should set the final runway, and we see how markets are feeling, rate cut odds, all that good stuff. And then we go from there and let Powell do the dirty work to confirm the trend for the next quarter. But now, let us get into the plays. So, Chattadonia, I hope you're ready for it. That's everything for this week. I think it's pretty simple, even though everybody is getting hyped up. I do think our work is cut out for us tomorrow, so I'm going to start with a weird set of plays, I guess, because they're not really related to the data that we're getting, but I got to start with play number one, Meta. I have Snap up here, but Meta, that's probably the main one. I was looking at the plays today. They kind of had a little bit of a bounce, but I would watch out for it. They had a big drop today, and if you looked at the news, it seemed like the only comments or news was comments from Trump about being against Meta or the TikTok ban and all that stuff. So the way I'm looking at it, it was an overreaction. I don't know why it would have dropped 5%. They were just hitting 520. I think if we get a good CPI tomorrow, things are looking good in tech and people want to buy these names and we don't get too broadened out of a rotation, these may be good to flip on a bounce play for Meta. So going to watch out for that. Even keep an eye on Snapchat. I do think they got a little bit of that today too. So watch out for that. That is play number one. Then play number two. This one, I guess this is one of the plays here for tomorrow, the Zaza/ZQ. And this one's very simple. I brought this up not too long ago. Even Danny brought this up in the chat. A couple of chads were bringing this up. And right now, the odds of more rate cuts is about 20%. The odds of no cuts at these meetings is about 80%. So right now, there is still a little bit risk here. And the way I'm looking at it is if tomorrow's data, if this skews the rate cut odds to like a 90%, a 99% in one direction, I am just going to take the opposite end. So So not guaranteed on this play for tomorrow. It really depends. We need that data to really move something. So if we do get a surprise number, a blowout, maybe this has that effect. But this is something I've been watching for because it has stayed kind of sticky after giving back over the last couple of weeks. So watch out for that. That is play number 2. And then finally, play number 3. I made a baby option trade on this one. This one, it went up right away, and I think it's going to be an interesting one, so we'll see how it plays out in terms of value and CPI and everything else tomorrow. But AAP, Advanced Auto Parts, they got a stake from Third Point, said they're looking to turn around the company a little bit. They have moved a lot already, and that's why I'm saying this could be good, either short-term momentum or a longer swing, but the way they've already bounced, they've kind of had some of that recovery bounce. So I wonder how this activist involved is gonna play out. See if it turns into a Disney situation or anything, maybe a lot quieter. But at the very least, we may get activity. And if the market starts moving in its own little pockets, this thing has its own little bit of news. Would love to see how that trades this week with all the data. So watch out for that. That is play number 3. And as far as everything else, I did make a couple of plays today. I sold out of that one Pfizer for 1,000%. We bought these at 8 cents. I made one free at like 30. Then this one went up to 80, 1,000%. So got out of that. I grabbed 2 Advanced Auto Parts. That was for the last play. Grabbed $90 calls at 5 cents. This was just related when the news came out. I put one for sale for 30 to try to make it free. I don't know if it ended up filling there, but that was just the snake on the chain. Then I grabbed an ADM play for tomorrow. We played both ways on that. MTN, we only played one way. That one's going to get clapped. And then Casey, we played both ways. These ones went up like 200% before the pre-earnings. I think we just got them very cheap for a very expensive call. But other than that, I made a play on MO. I grabbed 44.5 calls for March 28th for 5 cents. And then I made a play on Apple, a 185 call for 27 cents. For next week, they had AI news. But MO, we talked about this one yesterday. They kept going up, and I'm really liking this one. So I decided to go with the play. They don't really move until they actually start moving. So we need one of those monster breakouts from MO, but they're getting near their ex-dividend. It's in a couple of weeks here, and now they've broken out to like the high of 2024. So this is what I was looking out for. If we get more broadening, think that could be a good one. Was willing to throw some down on the options, but main play is going to be on the long term, and we'll see how it takes us. But other than that, still in the gold short, getting clapped on that from last week. Oil play, still holding that one. That one went down as well. I was even in an MNQ on Friday, holding that one. That one's down. I'm going to be playing that through the CPI, and then we'll go from there. And I'll probably hold a lot of these plays until Powell, and really by Powell, we'll know which way the wind is really blowing and whether or not we get continued upside or switch gears. But Chattadonia, stay locked and loaded. That is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, sometimes our biggest problem is thinking that we have a big problem. Get out of your own head. Stay in the game. Stay in it long term. Put everything in a long-term lens. Don't ever forget that. God's plan, baby. God's plan. But Chad, I love you. Drink that water. Stay hydrated. Stay healthy. All that good stuff. I'll see you on the AM and Horn.